Hello traders, today is the 16th of March. My name is Neville Hornsey, market analyst YouTrading, and today I want to take a quick look through the US dollar. I'm going to start with the YouTrading.com Forex heat map. We can see here that the euro is one of the strongest currencies. The Australian dollar is actually the strongest currency. Looking down, the US dollar and the Japanese yen are fighting it out to be the weakest. Swiss franc is also quite weak. So bottom left-hand corner is turning green, top right-hand corner is more red. So we're seeing more of a risk on day today. Moving to commodities pairs at the moment, we've got Canadian CPI coming out in an hour or so's time. So someone's probably front running the CAD, essentially hoping that the Bank of Canada will raise rates on a sort of higher print. So maybe they've already seen the print. You know, sometimes the CAD is known for having front runners who get the information early. So maybe CAD goes higher. Maybe they're thinking that the Bank of Canada will raise rates. Going back to the Forex heat map here, the yen and the dollar are obviously going to cancel each other out. So the dollar yen is going to stall out below that big figure ahead of the FOMC. Someone might even take profits ahead of that. But looking down, Canadian dollar is obviously also moved by the sort of energy markets. So if we go to a chart on the sentiment indicator on active trader platform, 89% of traders are still trying to go long the sort of Brent contract. What I'm showing here is that Brent has come back into this rising channel, and normally rising channels break to the downside. We obviously had a big blow off top to the upside, all the way up to $135 a barrel, nearly up to 140. We're seeing news of, obviously, that was on the worries that Russian oil would be embargoed and sanctioned. If we go to news headlines, we can see here that Nazanin has been given back her UK passport, and she's on her way back from Iran to the UK. So that's another step forward in the, I'd imagine, the nuclear deal being signed off, which will then allow Iranian oil to come back on stream. That is obviously also down to OPEC and including OPEC plus what happens with Iranian oil. But that's a big move towards getting Iran back into world economics. Right, going back to the pound. Pound is mixed today ahead of the Bank of England tomorrow. They're going to be pushed around by the Euro GBP, and also the US dollar. If we look at the Aussie, that's obviously good for commodities. As commodities go higher, Australian dollar does well. But I think this is all going to come undone, because if we go back to the news, we can see here that China's COVID cases are going a lot higher. They're having to shut down major sort of industrial manufacturing cities. So there's going to be blockades, there's going to be disruptions, supply chain sort of disruptions coming down the line, which will be inflationary and also bad for economics. Going to the Forex calendar. So like I said, Canadian CPI coming up. Then we've also got US core retail sales. So the US dollar will be in focus then. Then there's a little gap between that data point and then the FOMC. The market's pretty much priced in 25 basis point rate hike, taking us up to 0.5%. If we were to get a 50 BPS, then I imagine the market would re-rate, because they're not currently pricing in a 50 basis point rate hike right now. But the FOMC press conference will probably be the most market moving thing at 6:30 p.m. today. Essentially waiting to see if the FOMC, Fed Chair Powell are more hawkish than maybe other central banks who are worried about the Ukraine situation. If they use that as an excuse to sort of become less hawkish and more dovish, then we might actually see a bigger decrease in the US dollar. So if I open up the chart on the actual Dixie, we can see here $99 was a sort of target. Obviously, for some traders, they've sort of paused there, took profits, and now we've gone sideways. The $100 sort of level being there, it's just too close not to tag. Somebody would be gunning for that. There's no reason why it can't. That would take us back into the middle of this balance area here. If we were to get a really hawkish FOMC, then we could even be going up as high as 102. But I think maybe a pullback and then a push up into the 100 at some point in the next 48 hours. That also depends on what happens in the euro. Obviously, the euro USD is the largest component of the dollar index. So if euro does go a lot higher because of renewed peace sort of negotiations, more positive rhetoric coming out of Ukraine, Russia, then, if that takes out the high of 1.113, then that dollar index also comes lower. But at the moment, trading in the range between 9th of March and 10th of March, and quite possibly going to find some resistance in the near future. Aussie US dollar bounced off a trend line. Like I said, these rising channels generally break to the downside. So I'm expecting, maybe a push up in the Aussie up towards the 0.73, then a reversal and come back lower on a stronger US dollar. And then that means we can start to target this sort of double bottom down here around 0.697. Dollar CAD, Brent and WTI and energy markets are going to come lower. That's going to bring the Canadian lower. That means the dollar CAD will go higher. At the moment, dollar CAD's coming lower. Maybe they're going to take out the double bottom from around the 7th of March and 11th of March. If they take that, then the next target to the downside is this low here from the 3rd of March, which is 1.258. Take that, and then we've got this demand zone down here around 1.25. So whilst if you look at the dollar CAD, 77% of retail traders are trying to go long. Until that goes to neutral or even bearish, then this dollar CAD can come lower as far as I'm concerned. And then once they flip, then that would be my signal pretty much to look for that long, maybe all the way down here. Pound US dollar, I've got a fib extension to the downside that's been hit last few days. So we had this swing high here, 12th of January, 2022, down to the 27th of January, 2022, back up to the sort of double top here around mid-February. Then this big push down on dollar strength. In this sort of zone, that's when we had 2 rate hikes. The market's obviously expecting to have a 3rd rate hike this month on Thursday, so tomorrow. If we do get that and a slightly less hawkish FOMC, like I said, then maybe we'd see the GBP USD go up to 1.33167. However, I am expecting the pound dollar to actually come back down towards this 1.262, this sort of fib extension to the downside. I just think the dollar is more likely to strengthen than the pound at this stage. Dollar yen, 119 is a target I think we're going to try and reach, possibly 121. Obviously, when you get a massive imbalance like this, there should be some sort of pullback. The market doesn't go up like parabolic without some sort of retracement. So if we were to put a fib up, 50% takes us to 116.5, so just above this double top here. So if I just draw a line across that, so that was resistance, probably come down to act as support. If we look just below that, the 10th of March high, 0.618 retracement, 116 on the big figure, something like that might be a good sort of retest, continuation higher. If we do get a deeper retracement, maybe down to the 0.786, we do have this high from the 7th of March, 115, and was it spot 45? That could be like the deepest retracement back into the middle of this balance area before that push up higher. Obviously, if we take out the low from the 24th of February, then this whole bullish move is done as far as I'm concerned, and we're starting to look for reasons to get short. So that's what I'm seeing in the dollar at the moment. Obviously, going to keep my eye on the dollar index, see what happens. If we don't go much lower between now and the FOMC, I think that gives us good opportunities to go long. So we'll go down to like say a 30-minute chart. And if we look left, we're looking for something that hasn't been tested before. Like, so this candle is like the lowest swing low from where we are at the moment. If we look left, we've got this imbalance candle here from 10th of March around the US Open. We've got a high here from 130. That would be an ideal opportunity. $98.17 would be, a perfect place to look for a rejection to go higher. And then depending on what the actual statement says and the sort of press conference afterwards, does this go much higher than this balance area here? Does it get back above the sort of swing high and $99.31, or does it just sort of roll back over? But at least if we're getting in long at this sort of low, we can put our stop here underneath the 10th of March low and sort of just mitigate our risk and hopefully target that 100. So if we were to get that sort of trade, if we were to get long here, put our stop down here and target the 100, then that would be a risk to reward of 3.7. So that would do me. Decent trade, asymmetrical sort of trade, and that's what I look for. So yeah, that's what I'm looking for. Hope you do well today. Obviously wait for some actual rejections. Don't just buy it or sell it on a whim. Have your strategy in place, know what you're looking for, and good luck. I'll speak to you tomorrow.